What is up, everybody, and welcome back to my YouTube channel. And before I get started with today's video, I just quickly want to do a recap of the previous episodes. So in the first episode, I introduced to you market structure, and I gave chart examples and textbook examples of market structure. And in the second episode, I introduced to you substructure or internal structure. In today's episode, I will be introducing liquidity to you. So what is liquidity? Liquidity in its simplest forms are just orders. These orders may be buy stops, sell stops, or limit orders, and or stop losses. These orders are usually found at swing highs and swing lows. What I mean by swing highs and swing lows is just basically the movement from higher low to higher high. We call that a swing. So it could be found at a higher high or a higher low, or at a lower low or at a lower high. That's what we mean by swing. These could also be found at relatively equal highs or lows. So this may look like double bottoms or double tops. Okay, so just a quick example of what I'm talking about would be this. All right, so anywhere here is a swing high, and we would consider this to be buy side liquidity, because for us to take that liquidity, we would have to be in a buy program or would have to be bullish. And this one right here is sell side liquidity, because for us to take that liquidity, we would have to be bearish or in a sell program. Okay, now another thing I want to mention, if we are on a higher time frame, and this is higher time frame market structure, this buy side liquidity would also be considered external range liquidity, and the sell side would be considered external range liquidity as well, depending on the direction of the market. Okay, now anything found within this swing, any highs, lows, equal highs and equal lows found within this swing, would be considered internal range liquidity, as it is within this swing. Okay, and let me give an example of what relatively equal highs would look like. So that would look like your classic M pattern, like that. I'm giving you a textbook example of an M pattern, but we know M patterns usually print different. Sometimes we could have one print like that, and we could have another print something like this, and then we have, I don't know, something like that, and then we come back down like this. So I would consider that relative equal highs. So liquidity would be found around these areas. So that would be relatively equal highs, and the opposite would be relatively equal lows. So let me just go ahead and just do the opposite of this. Alright, and we would consider this equal lows, and that's where liquidity would typically be found. Just for control, because I already drew this, I might as well just draw this. Remember, we say relatively equal highs or lows, so this is relative enough to being equal to me, so liquidity would be found around those areas. Okay, now let's try and do some chart examples. Just give me a second. Oh. Alright, everything's gone, and then I'm going to enable the candlesticks. So if you were looking to sell around this area, where would your stop loss usually be? Your stop loss would be right at the top here. And if you are looking to buy down here, your stop loss would be below that low right there. Okay, so that's why uh, I said the liquidity is found at either swing highs or swing lows. Internal range liquidity, it is the same explanation. We are talking about swing highs or swing lows, but internal swing highs and swing lows. So you would find liquidity there, you would find liquidity there, you'd find liquidity there, you'd find liquidity there. Let me move to the 4 hour, see if we can find better internal range liquidity. Alright, so yeah, so all these highs in here would have liquidity on them. What eco highs and eco lows may look like, aside from the textbook examples, this right here is an example of eco highs right here, or relatively eco highs right there. That would be what I consider relatively eco highs. This right here I would also consider relatively eco highs, but if you look to our right, we had a sweep of this liquidity by this leg right here. So this liquidity was taken. Do we have any relatively equal lows that I can give an example on? Let me see if I can find any. Oh, great, nice. We have relatively equal lows right here as well. Right there. Do we have any other more examples of relatively equal lows? We have another one. Oops, not measure. We have another one right here from this candlestick right there to that one there. Those are relatively equal lows. Let me just make this larger so you could see. Alright, so those are relatively equal lows. Okay, so I don't think there's anything more that you would need me to explain. I could also explain, like I said, sometimes liquidity is also found on session highs and session lows. So let me just move on down to the 5 minutes so I can give you an example of session highs and session lows. I'm going to be using the New York AM session for an example. The trading view is set to my local time frame, but I will be using New York time frame for the example because I know what time it starts, or I know the conversions. So the New York AM session, 8:30 my time, is about, bingo, right there. So 8:30. So I'm not looking for 8:30, I'm looking for 8 hours. So that would be the low because 8 hours is over there. 8 hours is 14 hours my time, and then the AM session would end at, that's the high, so the AM session would end at 6 p.m. or 18 hours my time, which is 12 hours New York time. There it is. And then I'm also going to draw the London session. Just give me a second, let me pick up a rectangle. London session, 8 hours my time is what? Okay, so I'll pick this as the low. Starts right there. Where's the low? The low is right there. Then I will push it all the way up to 12 my time. So that's the high. So as you can see, we have a high and we have a swing low and we have a swing high. So above these would be liquidity as well. And as you can see right here, we took liquidity and then we came back down and took the liquidity at the bottom as well. Okay, so I hope I didn't confuse anybody with this. Just a quick recap of what I've mentioned. Liquidity are just simply orders, be it sell stop, buy stop, or any limit orders or stop losses found at swing highs and swing lows, or at equal highs or equal lows. And I've given you some examples. I hope I have made the examples simple and clear as possible. And that is all I had for you for this video. If you have any questions, as usual, just leave a like in the comment section. uh, Sorry, if you have any questions, just leave a comment. I'm so distracted by my neighbor's dogs. Jesus, they're so noisy. I'm so sorry if you can hear that through the mic. But feel free to leave a comment if you have any questions, and leave a like, subscribe, share my video if you can. And I will see you in my next video.